Well, it's not a bad way to end the week. Stocks up on this Friday and recovering from earlier in the week. Where are we heading? Joining me on the program is Mish Snyder. She's chief strategist at marketgauge. And Mish, let's take it from the top as we look at the major indexes. The Nasdaq isn't quite back up where it used to be, but what's your take here?
Well, actually, for somebody who has the economic modern family as my real sort of sector rotation, macro analysis in terms of the US centric market, I'm thrilled because I have been watching and enjoying a major blast off in the growth and tech space for 2 years, but really tapping my fingers, waiting for my grandpa of the modern family, which would be IWM, the small caps, the Russell 2000, and my grandma of the economic modern family, Granny Retail, which I look at through XRT. And then to kind of sum up the inside sectors would be transportation, IYT. I've been waiting for them to do something. I mean, and so they're doing something. So for me, this is exciting because it's been a long time since we've seen not only the rally broaden out, but broaden out to an optimism about where the U.S. economy is heading with a new administration. Whether it turns out to be the case or not, right now, that's the coattail to be hanging on to. So we're seeing that happening, which in spite of higher rates, maybe an inflation escalation, I know we're going to talk about that, and certainly a stronger dollar, those areas are really outperforming right now against the NASDAQ and the good old tech stocks, and even good old could never go down NVIDIA, which isn't really going down, but it's not going up either anymore.
So I want to talk about something that everybody's talking about today. We got to talk about Bitcoin and cryptos.
Well, yeah, I mean, here's okay, so this Jim is classic, right? This is as an old school commodities trader who knows what a parabolic move looks like. And I have been actually documented of calling Bitcoin in essence a commodity. First of all, even long before the Trump administration, pro-crypto administration came into play, we had the halving this year. And generally, if you look at historically the halving, it takes about 6 months after the halving for Bitcoin to start moving up. And so it really kind of was sort of on schedule, right? Because it was the end of October, November, right around the election when it started to move up. And now, of course, the jet fuel has been the Trump administration and the talk of having a Bitcoin reserve and all of that. So here we are at 100,000. You know, it'll be interesting to see whether we get to 100. I still think it's possible we get to 130 to 150 maybe after the election. But we also know from a historical standpoint that we can have vicious downturns, especially, you know, when you start to talk to the classic, what we used to say in New York, when your taxi driver says buy gold, it's probably near the top. I go to get a manicure and my manicurist is talking about buying Bitcoin. You think it's too late to buy Bitcoin? You know, it's the question that I've been getting. So it goes back to what I just said, Jim, is that this is fantastic. Do I think that it'll never go down? No, I think it will, and you have to manage it accordingly. What's been more interesting to me also, and I shouldn't say more interesting, but what has been equally interesting has been some of these alt currencies that have also given tremendous money. Let's talk about Ripple, XRP, which we know is a great exchange system worldwide, moves things so fast, like under a second, but was illegal in this country because of the SEC lawsuit that came against it. And so it really didn't do anything for a while. And now I just looked at it. It's like at $1.47, which doesn't sound like much, but it was at 50 cents just a couple of weeks ago. So it's basically tripled in price because Gensler is leaving. So, you know, I think like everything else, you have to be intelligent, follow the momentum when it's there. But when you start to see the momentum exhaust, you really have to protect yourself, like you just said with a target. So looking at Bitcoin, we had a lot of consolidation mid-November here after the election, after we got that initial pop. So now we're getting this move up. So I would say if you're looking at Bitcoin and you want to kind of stay the course, but you don't want to be left unprepared, if we get down under now 89, 88,000, that's probably not so healthy. So just keep that in mind.
Now, I want to talk about something that, the markets are expanding due to Trump's victory. But you and I were talking just before we went on the air that things look different today than they were, let's say, in 2017. We're over 36 trillion in debt. The deficit is almost close to well, it will be 7% of GDP this year. Interest rates aren't 0.5%. They're on their way to 5%, in my opinion. Oil is much higher and inflation is much higher. So I think President Trump in his second term is entering into a different economic environment than where he was in 2017.
Absolutely. And also, like you said, you just covered all the points. Plus, we had this little thing called a pandemic that changed a lot of factors. And also, on top of all of that, while our debt is up, but yet our economy looks like it's relatively healthy, which means, of course, like you said, the yields will probably not go down as much as people are hoping, which is why you've got these huge hedge funds right now, short yields. When I say short yields, short TLTs in anticipation of higher yields. We also have lots of issues going on globally with Europe. The euro has gotten killed. Japan, there's been worries about the yen. So, it's really going to be a question of how isolationist, if you will, can we be, given that we do need people to want to trade with us. I don't think we're at the point where we can be completely self-sufficient. That's the utopia. And, let's face it, we've got great resources in this country and incredible borders with Canada, Mexico, and 2 oceans. So, we're very insulated here. But at the same time, we also have a world out there that could be planning for this. There's been talk that there's been a lot of BRICS sort of planning on this because of the fact that they're expecting Trump not to play nice. So, all of these things come into play. So the question is, are we heading into a bubble if we do the things that Trump promises that he's going to do? Deport people? Well, we need those people to work jobs that other people aren't going to work. And then how do you get rid of them, basically? Military might, going through homes sounds pretty dystopian to me. That's the opposite of the utopia. Lowering taxes? Well, yeah, it's a good thing. Consumers have a lot of money, and that's why I've been so excited about the consumer sector, because you can see that the consumer sector is very happy today. It's just taking out over 10 months of a consolidation in the XRT. So you lower taxes, you give them more money, but that's going to be inflationary. And then you have inflation. And then deregulation is great, but where's the oversight come from? And then, of course, you go through deregulation and then cutting back on federal government employees. And where do those people go? Because even though we have a robust jobs market, we don't have that many jobs to fill. So, there's a lot of things that could go wrong. We hope they don't, but you have to be aware.
I want to talk about something, a little bit of an anomaly, and that is where gold is today. And I'm looking at a chart of the US dollar. It looks like a NASA space launch. And then we've got rising interest rates. Typically, a rising dollar, rising interest rates go hand in hand, but gold would be going in the opposite direction. Instead, it's going up.
Right. So gold is the great mirror, if you will. If you want to see the reflection of what could go wrong, that's why we're getting a lot of central bank buying outside of this country into gold, because people are nervous. I didn't even mention the geopolitical situation, which again, Trump has said, oh, I'm going to solve that. I'm going to end the war with Russia, Ukraine. I'm going to end the conflict between Israel and Hamas. And, that all sounds great, but these things are so entrenched right now. I don't think it's so easy to come to the negotiation. And all of this also potentially can escalate. And that's what gold is reacting to. It's reacting to a potential debt bubble. It's reacting to a total global debt crisis. It's reacting to geopolitics. It's reacting to the fact that with our debt and high interest rates, it's really hard to pay off that debt. It's reacting to the fact that some of the ideas are, very Argentinian looking, but we're not Argentina. And so can they actually be pulled off? Can you get everything reshored to this country with tariffs, which we didn't mention, and then pass the consumer costs, the higher costs to the consumer, and that doesn't turn out to be inflationary or even worse, stagflationary and recessionary? Gold is absorbing all of that. And that's why you have to have gold in your portfolio.
Well, let's talk about its sister metal, which is silver.
Okay, so I love silver because silver has a, sort of a buy function. It has an industrial use, obviously, and with data centers and AI, and whether we go into EVs or not, that's a whole other controversial topic. Or go back to somewhat solar energy, because we need all energy on board to really be able to power all of the needs that we have, not just here, but globally. Silver is a big part of that. So there's that. And that's why it's trading over 31 cents. But what we're really watching for is the classic silver outperform gold inflation narrative. We haven't seen that yet. Silver is still underperforming gold. But if that switches, I think that that's a conversation that you cannot ignore as well, in terms of, is inflation not only, we talked before about it being at the bottom, it never got below really a core 3.3% for a long time now, which means to me the direction is up, not down, in terms of the cost of goods.
Yeah, we see inflation going up. The other thing about silver, I think this will be the fourth year that we've been running silver deficits. So, and unlike gold, most gold that's ever been mined is still in existence today, where silver in many of its industrial applications is consumed.
That's an excellent point, and a great add-on to what I was trying to say about its industrial use. So yes, agree.
So let's talk about something else. When we're on the subject of commodities, I want to look at the oil market. The IA came out with a lot of bearish reports during the summer and then the beginning of the fall. But Mish, I'm looking at oil consumption. This will be the fourth month that we're consuming over 103 million barrels a day. And I'm watching inventories and they're dropping. So I got a feeling they're going to have to revise their bearish outlook.
Well, yeah, but again, part of the reason why they're so bearish is because Trump has talked about opening up the pipelines and, the old drill baby drill thing. So that's why people think, oh, he's just going to be able to create a lot more oil. And maybe that's true. But, this is where, when you have maybes and what ifs, I like to look at the charts. That is, for me, my comfort zone. And if you're looking at the crude oil chart, I'm looking right now, actually, as we speak, at the January 2025 contract of crude oil. We have a massive bottom that was formed between $64 and $67. I have to assume that, at least for the time being, we're not going lower. And if those are massive bottoms, then the question is, can we go much higher? And I would say, just looking at that, it is possible that we can see oil get back up to $80 a barrel before we kind of reevaluate pretty easily. And essentially based on what you just said about the demand and the lower supply.
Let's turn our attention back to stocks. You were talking about the small caps. They've been kind of struggling, but it looks like they're getting a lift here.
Yeah, they are actually well outperforming today percentage-wise. Right now, as we speak, IWM is up 1.73%, while SPY is up only 0.3%. So that's kind of cool. I mean, like I said, for me, as the creator of the economic modern family, I'm thrilled. So essentially what that means, first of all, is we had a high in 2021 in IWM at 244.50. And we sort of got there intraday recently. but we were not able to close there on a weekly basis. And also, if you're looking at a monthly chart, we're actually really doing unbelievable. But if we just go back to the weekly chart here and take a look at where things are going to really break out, if we close, the highest weekly close, because sometimes you want to look at the weekly close here, has been at 241.81. And so we're not there yet. So at this point, we're very close to a major breakout, but we cannot say we actually had the major breakout yet. Right now, all we're doing is testing the higher trading range of last week. But if we can get through that 241, 242, we don't even have to worry about the November 2021 high. We can say, I'd say with some kind of a surety that that means that small caps are going to go much higher.
So when we're looking at the market right now, I mean, last year, the markets were dominated by AI stocks, the Mag 7. And I'm looking at some of the charts, whether you're looking at Amazon, you're looking at Microsoft, Google, some of those charts. I guess maybe the thing that strikes me that looks healthy is this rally has begun to broaden. It's going into a lot more sectors. It isn't concentrated in just technology.
And that, really, if you want, this is what I was saying in the very beginning, if you want to measure the health of the economy, I've never really understood how people can say that NVIDIA rocking and rolling constantly to new highs meant that the economy was good. I mean, it's definitely healthy for the future of AI, no doubt. And AI could help an economy by making it more efficient. But you still had to look at companies that are manufacturing in the US, the smaller cap companies. You still have to look at the consumer and make sure the consumer is still in the game. I still think that's the most important part. And you still had to look at the good old Dow theory transportation to see that goods and services are moving robustly, and all of that is happening right now. So that broadening out into those inside sectors of the U.S. economy for now is very, very good news.
So let's talk about a sector that's been hammered lately, and especially with the elections and the possibility of RFK, and that's the drug stocks and the healthcare. What's your opinion here?
Well, yeah, I mean, that looked like it was going to explode to the upside if you're looking at IBB or XBI, and then the announcement of RFK Jr. sent it just skidding down. But it did go down to some decent support, and now it's getting a pop. So reality of how much can one man do, don't be so scared, is setting in. What's interesting about the biotech space to me, and I'm only, rather than try to focus on everything, I mean, today we're getting a big move up in Moderna and things like that, but what I'm mostly interested in right now are the diet drugs. The companies, and there's going to be a lot of people jumping into that space. I read about Amgen doing that as well, but we know we have Novo Nordisk. Now, that's not an American company, but it is a biotech. Eli Lilly, another one, that are really basically, I'd say, like the Teslas of the diet drugs. And I think that that is probably one of my major themes that I can say, regardless of what happens in 2025, that will do well. I read yesterday that big companies with 500 plus employees are starting to allow people on their drug plans buy Novo Nordisk and Eli Lilly obesity drugs. So what does that tell you? That tells you that not only do people want to be thin, who have never been able to be thin, don't really care about some of the side effects, because obviously side effects of obesity is really bad. And more importantly, if they can figure out how to do these drugs and keep the weight off, what does that mean for everything? Not just their self-esteem, but they're going to want to look at their skin and take better skincare. They're going to want to put on more makeup, if, male or female, I won't discern. They're going to want to get their hair done. They're going to want to buy nicer clothes. They're going to go out and walk more, and they're going to want to eat less junk food, because as you get healthier, that happens. This to me is very exciting. So in the biotech space, I would really keep my eye not on, like I said, the two Tesla type drugs, Novo Nordisk and Wegovy and Ozempic, but also Eli Lilly, but the other companies that are going to start to compete with that, because the lower the cost, the more the consumer is going to be able to afford it.
So as we look at this, let me throw a wrench into all this. And two areas I'm watching is inflation, which I think has bottomed, and the other one is the rise in yields. If inflation comes back and it starts to rise again, where does that put the Fed, number one? And number two, if yields start to rise and go over 5%, what are the risks to the market?
Well, these are very, very good questions. You know, the growth area really didn't mind higher interest rates. So it's interesting right now that that would be sort of leveling off while we're seeing very interest rate sensitive areas move higher, like the consumer, like the transportation, and like the small caps. So the question really is going to be, can the market really find a normalization between inflation and interest rates at around this sort of 4.5 to 5.5 for Fed funds rate? You know, that's something that is possible. I mean, let's think about it. Historically, having interest rates around 5% has been really kind of the norm. And we got really spoiled, if you will, when interest rates dropped close to zero. So I think the other side of the argument is that it's not sustainable and something's going to have to give. If the Fed doesn't lower rates, there's going to be arguments with Trump because he wants lower rates. It is possible that we get some kind of a level of normalization. And this is, of course, is assuming that inflation doesn't go out of control. Inflation goes out of control, we're going to have a completely different conversation. Absolutely. Everything will change again. Right now, inflation has gotten basically to a point that people have been able to live with to a degree. I mean, we're seeing pockets like coffee. My God, coffee's gone crazy. Sugar, by the way, is another thing I watch in my trifecta. And sugar prices have not come down that much. If they start to escalate from here, I think that's a very inflationary factor. Obviously, oil we just talked about. And now the dollar, who knows? I mean, with this move into Bitcoin, is this just some kind of fake out move in the dollar, and is fiat currency at risk? And then what does that do for inflation? So yeah, I think that could put the screeching brakes on everything. But right now, not yet.
So given what you see right now, if you were looking to put some money to work, what looks most promising to you?
We just doubled our position for our clients in the retail sector this week, you know, with this major breakout over, like I said, 10, 11-month consolidation in XRT. The whole retail sector is still undervalued. I mean, that peaked in 2021 before the interest rates started coming up. So basically, what we're really looking at here right now is a possibility, if things don't get too insane, of XRT sector moving up. The high was over 100, believe it or not, and we're trading right now at 81. So there's room to the upside there. The diet drug craze, as I mentioned, what are the companies that could benefit that? And we're already seeing Elf Beauty has had a big crash. That's moved up a lot. AbbVie, which does a lot of injectables, that's moving back up now. Eli Lilly, Novo Nordisk, they crashed, looked like they found support. This is kind of where we're looking. On top of that, we're still looking at commodities. You know, the energy space looks great. It's already been rallying, and I would be looking at crude oil. I'd be looking at silver. I would be looking at gold. If you don't have a position, at least you kind of know where support is right now. And of course, you know, let's not forget our good old cryptocurrency space and even the food commodities, which have been so undervalued. But any more disruption, if we start to see soybeans, corn, and wheat move up, we can already see DBA has gone up a lot because of coffee. This is kind of how we're spreading out our portfolio right now. And then in the tech space, believe it or not, I wouldn't ignore it. I do like something that's been so beat up, but might actually benefit from a Trump admin, and that would be Intel. So I think that gives you a lot to think about. I mean, obviously defense has been a very overvalued space, but you know, if you got any kind of decent dip, might be interesting. And you know, let's look at solar. You want to talk about something that got totally hammered. First Solar, Solar Edge, TAN, the ETF, have gotten killed. So I would be keeping my eyes there as well. I got a lot on my bucket list right here.
Same here. Well, listen, Mish, as we close, if our listeners would like to find out more about the work that you do at MarketGauge, tell them how they can do so.
Well, we do have a website, marketgauge.com. I write a daily blog, which you can easily sign up for. So a lot of the things that I'm talking about now, you can actually read about with chart analysis and fundamentals. I'm very active on X. My handle is @MarketMinute. And I do have a book that talks a lot about some of the things we talked about, which is the modern family, and then how I look at charts in terms of phase changes. And that's called Plant Your Money Tree, a guide to growing your wealth.
All right. Well, listen, I want to wish you a happy Thanksgiving, and thank you so much for coming on the program. Always enjoy our conversations.
That concludes our weekend edition of the Financial Sense News Hour. To speak with our